2018 was one of the more volatile years in the last decade, and any hopes that markets would settle down in the run-up to Christmas didn't last long as they continued to tumble, largely due to fears over the US and China failing to reach a trade agreement. The S&P 500 index had its worst December since the Great Depression of 1931, and to give an idea of just how volatile it was, the index moved up or down 1% 9 times in December, compared to just 8 times in the whole of 2017. It's not just investors who endured a difficult December. Theresa May cancelled the meaningful vote on the UK's withdrawal from the European Union, knowing that it would almost certainly not be passed. Then a couple of days later, she faced a vote of no confidence from her own MPs. The huge uncertainty surrounding Brexit was another factor in the wobbly markets last month, and will probably remain so for a while yet. So just how much did markets fall in December? Well, the US was one of the worst hit markets, as the S&P 500 index fell around 9%. The UK, in comparison, got off fairly lightly, with the FTSE 100 index losing just 3.5%. European equities fell 5.2%, while Japanese stocks lost 10.2%, and the price of oil fell a further 10.8%. In the foreign exchange markets, the dollar stayed fairly flat against the pound, while the euro gained 1.3%. We're just a couple of days into January, and it's been a nervy start to the year, with one of the largest companies in the world, Apple, announcing a cut in its forecast earnings. Brexit will be dominating the headlines again soon enough, as the next meaningful vote in Parliament is due to take place in a couple of weeks. The Courtiers multi-asset funds have been very defensive in the huge volatility we've seen in the last couple of months, and we're going to carry on looking out for opportunities in the options market as they arise.